is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott. Andrew Young is back from his Euro vacation. Looking forward to hearing more about that. Andrew, while you were gone, there was a lot of movement on the regulatory and policy side, especially in the U.S. You may have seen that the U.S. House of Representatives passed this new bill, the Financial Innovation and Technology for the 21st Century Act, better known as FIT21, that, if implemented, could lay the regulatory groundwork for the next era of the web and the financial system for the digital economy. It still has to pass the Senate, which is, a big if, obviously, and then it heads to the White House. And President Biden has said that if it does come to his desk for signature, he will not veto it. So this sort of change of tone in the U.S. had a lot of people speculating that maybe the political discourse around this industry and the asset class had started to shift. Now, when it comes to FIT21, there are certain elements of it that, some people say are problematic, but I think overall it's very helpful because what it does is it basically overcomes one of the biggest barriers to financial innovation in the US, which is regulatory uncertainty around digital assets. And it also does a kind of clearer job of delineating between the two key regulatory agencies, the SEC and the CFTC, trying to draw lines and distinction between who should regulate what. And it also throws a bone to people who are concerned on the consumer protection side as well. So it seems like overall there's a lot to like in this bill. So the question is, I guess, have people in this, have Democrats and others who are skeptical of crypto suddenly seen the light and are now viewing this as something that could be really great for the U.S., or are they bowing to political pressure? Do they fear that this issue could become decisive in the election, or could be used as a way for the opposition to raise money, and now they're sort of changing their tune as a matter of political calculation? Where do you stand on this? Is this just, real politic, business as usual, or is there a real tone shift going on?
Yeah, I think there's a huge tone shift going on right now. So the biggest thing I would say over the last 12 months has been how sort of strongly pro-crypto the Republican Party in the U.S. has come out as, sort of peaking with Trump putting out his statement 2 or 3 weeks ago saying he was, essentially extremely pro-crypto. He actually has a campaign ad called Trump is building a pro-crypto army, which is kind of like a funny rebuke to Elizabeth Warren's famous campaign ad, which is Elizabeth Warren's building an anti-crypto army.
Yeah.
So I think, and part of the reason why is crypto has become, by some estimates, one of the largest lobbies now in the U.S., largest by sort of member-wise, as well as pretty staggering amounts of money being raised by sort of pro-crypto super PACs and sort of different lobbying groups. And the thing is 50 million people in the U.S. own crypto. Maybe 90% of them don't care that much about crypto, but there's a good chunk of them, call it, a couple million people in the U.S. who are passionately pro-crypto. And a friend of the pod, Ryan Selkis, has actually been kind of like the leader of this movement. I don't know if people sort of follow him. I think we had him on the pod last year. Yeah. He's actually been incredibly outspoken. He actually spoke at one of Trump's events with the Polygon founder, one of the Polygon founders, talking
Which
about
one?
I think it was this political event that Trump had for his NFT holders. So people who actually bought one of the Trump NFTs.
Right.
He had an event at Mar-a-Lago with a couple hundred people where he spoke, and that's kind of like where he came out as extremely pro crypto, and that's actually where Ryan and the Polygon co-founder sort of also spoke, and shortly after Trump did, and that's after that, which was interesting, is a couple of articles came out from essentially leaks saying that the Democrats were panicking about this, about the fact that Trump essentially had come out as the pro-crypto side, and obviously the Democrats have been relatively anti-crypto, mostly led by sort of Elizabeth Warren and the SEC chair. And so right after that is when we saw the sort of dramatic last second U-turn on the Ethereum ETF, which went from essentially like a 10% probability of being approved to 100% overnight, just prior to the deadline. And a lot of people, I don't even know if it's speculation actually, a lot of people have sort of leaked that was related to that. It was essentially like Trump coming out so pro-crypto and engaging the sort of crypto political lobby caused a panic in the Democratic Party that led to the Ethereum ETF getting approved, as well as now you're starting to see the bipartisan support on these two crypto bills. So yeah, I definitely think it's pretty dramatic. It still doesn't really feel real that the crypto movement has like actual real political power now. Whereas, 12 months ago, that would have seemed absurd. And even just a month ago, it would have seemed, it would have seemed pretty crazy, like unrealistic. But
yeah,
I think due to a lot of the work that Ryan has done, as well as just a lot of the funding coming from the crypto industry, it's been a pretty dramatic turnabout. And I think the key thing about it is that crypto people, at least the crypto native, the passionate crypto natives, they are truly single issue voters, which is kind of crazy. And the thing is in an election that's this close, there's essentially only 7 swing states that matter. It looks like 4 of them are going to go to Trump, and the 3 Rust Belt ones are sort of up for grabs. And I think if Biden wins all 3, then he would win, and if Trump wins one of the 3, then Trump would win. Moral of the story is it's an extremely close election, so even a couple million votes is obviously massive. And so, yeah, it's been interesting to see.
Yeah, absolutely. I mean, look, I'm skeptical I think it's just a little too cute, the idea that, the Ether ETFs got turned around because of all this. But the timing is certainly, pretty compelling or convenient that, the week that FIT21 receives a broad bipartisan vote in the House and Trump hosts an event where he starts to really court this vote actively. You also see this thing that most people had written off for dead suddenly get approved. The thesis that I've talked about on the show, and I think I shared on one of our earlier episodes with a guest, was that in part I think the lack of you'll recall we had James Seyfarth from Bloomberg on, right, like a few weeks ago, and at the time he's saying the odds were like I think it was 50-50 or 70% or something, and he dropped it to 30 and down to like almost 10, and he said the no news is good news. Now James is like the guy, and he knows everything, and so he knows the U.S. system better than me. But we do have this experience here in Canada, which I was witness to, where the Ethereum ETFs got approved kind of as a matter of routine almost. I think there was a lot of the questions were answered about the Bitcoin ETF, and so they didn't have to go back and seek the same kind of clarifications as they did before. But also, there's not really a lot of grounds to deny an Ethereum ETF if you've approved a Bitcoin ETF. And, a lot of issuers who were in the queue might have reasonably sued the regulator, and that would have been something they probably wanted to avoid, right? So I think that for whatever reason, we got the approval. And it did also happen, obviously, during this really interesting time. Now, I've written a little bit about, what does this leave Canada? Because we do have a lot of Canadian listeners on the show, and I know we have people from like all around the world. So you're probably like, why do these guys talk about Canada so much? But it's interesting because we're here, and I think a lot about what we can learn from the U.S. and what things we can be doing differently. And it's interesting that Canada actually put forth this very comprehensive sort of proposal plan from a parliamentary working group that basically outlined a dozen things that the government could do to encourage innovation and to clarify the rules of the road around this asset class. And almost none of them have been implemented. So maybe the decision in the U.S. or this change of tone, as you say, this tone shift, will help to break other countries from their state of like paralysis or inertia around this. And that could also kickstart like a global move to build up new policies and regulation for the asset class. The ETH thing is worth talking about because Ethereum was like $3,100 on Monday of the week that this got approved, and then it shot up to like $3,800 almost instantly. And it almost tapped 4,000, but it sort of settled in more in that $3,800 range. And now basically like everything got priced in pretty much in the first few hours before it even got approved, right? It got priced in when it seemed like things had really started to shift in its favor. And now I think everyone's kind of rightfully wanting to know, like, where does Ethereum go from here? And I think this is something that's worth digging into a little bit more, because one of the things that will happen when the Ethereum ETFs launch is that Grayscale's Ethereum Trust will convert from a closed-end structure into an open-ended structure. When that happens, it means that holders of ETH, that's the ticker for this thing, will be able to redeem at NAV. Some of them have held it for a while. Some of them have purchased it underwater, like when it's trading below NAV. And so there have been some market commentators that have said, we're probably going to see outflows from this product, at least initially. And that maybe the inflows into the other products, the other ones offered by BlackRock and Fidelity and others, won't be as significant as what we saw with Bitcoin. And that this could actually lead to the inflows being tepid, or even potentially there being net outflows. And so this could actually be bad for ETH, which to me is very much like a middle of the brain, distribution thought process. It's like the dum-dums are like, this is really good for ETH, and the smart people are like, this is really good for ETH, and only people in the middle are trying to carve it up.
Yeah. The mid-curve. The mid-curve.
It's the, what's it called?
It's mid-curve.
Yeah, mid-curve. Yeah, the mid-curve people are thinking this way. But But let's think about it for a sec. So, Grayscale's Bitcoin Trust, by the way, is actually gathering assets now. So it sort of hit an equilibrium and now it's growing. But there was so much demand. We saw, I think we're at 13.5 billion of net flows into Bitcoin. If that happened to ETH is like, I don't want to speculate, but it's like, it will have an enormous impact on the price. I don't think we're going to see that kind of impact in terms of flows. But the Canadian experience, once again, is instructive in this respect, because we did see inflows into Ether ETFs in Canada that were easily 25-30% of what we saw with Bitcoin during that same cycle, the last cycle. So it's not like this is a rounding error relative to Bitcoin. It could actually be super material. Anyway, what do you make of all this? Like, putting aside the politics and the policy, like the price action, like where do we go from here?
Yeah, well, we've actually talked a lot about on this podcast, I think, recently about how Ethereum is due for like a hated rally, just because it seems to be like one of the most hated coins on sort of in crypto right now, in terms of just because it's underperforming relative to Bitcoin, which is obviously bigger than it, and underperforming to Solana, which is obviously kind of like the new comer. So it's a lot of people are like, ETH is like the mid curve of crypto. If like the smart people are buying Bitcoin and Solana, and the dumb people are buying meme coins, ETH is the one in the middle that hasn't been doing much. And honestly, they haven't been wrong up until now. But we had that huge 20%, like essentially 20% instantaneous move in Ethereum. And what's funny though is there's been so much negative sentiment on Ethereum. It finally gets this hugely bullish catalyst. The price goes up 20%, and immediately people start talking about how effectively, like, why isn't it up more? Why, like, this Ethereum launch isn't going to be successful. So many different things. People are even speculating about like asking like what's the long-term sort of economic model for Ethereum relative to something like Solana or Bitcoin, which is, to me, is hilarious, because Ethereum of the three is the only one that actually generates real revenue, which it actually then effectively directs to stakers as well as burning. So it's gone to such a ridiculous degree that people are questioning like the value capture of the only crypto asset that, to me, has value capture figured out. And then on top of that, there's just like hundreds of new L2s coming out every day, or I should say every year. It's just crazy. Like Base, which we talked a lot about, is exploding in growth as well. I think it's now become there's been more coins launched on Base than that have been launched in the history of Ethereum, which is crazy because Base has only been around for 6 months. So yeah, I mean, I just think, to me, like, the fundamentals are incredibly strong for Ethereum. It's got an Ethereum ETF. I think I think this is like the most obvious, again, not financial advice, but to me, it's the most obvious trade in the market right now. And paradoxically, it's like it's seen as like a stupid, obvious. It's seen as such an obvious trade that it's, contrarians in the market are like, why would you do that? It's clearly a trap. But to me, it's pretty clear. Bitcoin went from 30K to 70K off its ETF, hit a new all-time high. Ethereum is still, 30-something%, maybe 25-30% below its all-time high. Likely there's going to be huge inflows into Ethereum. Whenever I talk to TradFi people, Ethereum is actually much easier to understand than Bitcoin in a lot of respects because, Ethereum, you can actually model it using a DCF. It has value capture. It has a yield. I guess importantly, the yield isn't going to be going to the ETF holders. There's not going to be any staking, but still, there is fundamentals to it. It's not, Bitcoin is effectively a gold alternative, but which makes sense in some ways. But it's not, it's not like Dogecoin or something like that, which has no real intrinsic value. So yeah, I guess what I'm trying to say is I still think there's a lot of meat left on the bone on the Ethereum trade.
Yeah.
So I'm kind of just watching it. I don't think I would fade the bearishness on the Ethereum ETF for sure. I think.
Oh yeah, I mean, I'm totally with you, and I agree that sometimes just because it's obvious doesn't mean it's wrong, right? Like the arguments in favor of ETH at this point are really starting to stack up. And I do believe that, again, another sort of like mid-curve point of view is like layer twos are bad for Ethereum, which again, I don't agree with. It's like, if anything, it just solidifies Ethereum as the hub of the entire blockchain ecosystem. I don't, unless I'm completely misreading that, there's some fee capture that happens at the layer 2 level, but overall, this is clearly good for the thing that everything settles to in the long run.
So,
yeah, go ahead.
Sorry. Yeah, no, and I would jump in. I would say a lot of the bearishness around L2s originally was that, there's going to be like one or two completely dominant L2s that theoretically would become big enough that they could, stop paying. Because essentially the way the L2s work is they use Ethereum as a settlement layer, which is quite costly. It costs, it's incredibly costly. I don't actually have the number, but it can easily be sort of hundreds of thousands of dollars, if not millions of dollars a year, which is effectively revenue that goes to Ethereum holders. So anyways, moral of the story is, in a world where there's maybe one or two dominant L2s, then theoretically they could, not settle to Ethereum and just become their own L1, essentially their own chain. But that's not the world that we're in. We're clearly in a world right now, at least, that's fragmented across hundreds of different L2s. And I'm starting to hear about L2s. We're starting to hear about L3s, which are like specialized app chains built on top of L2s. Like, moral of the story is this whole thing is going to be huge.
But also huge and fragmented in a way that
huge.
Doesn't no single thing threatens ETH. If anything, they all become more reliant on it, right?
Yes, and also another one of the narratives was like, there's Celestia, there's all these different data availability layers, which in some ways.
By the way, we're going to have a Celestia person. They're going to have to explain this modularity meme that I see on the internet. Maybe you can do it for me at some point. But I know that modularity has become this modular blockchains become this new trend, right?
Yeah, exactly. Honestly, we need to get someone on the pod for that. That's actually the one spot we're sort of missing. It would also be good to get.
I was thinking about that. Yeah,
it'd be good to get an eigenlayer guy as well to talk about the whole restaking. We didn't really do it justice on our call a couple of weeks ago. But I guess what I'm trying to say is Ethereum is. It's really easy to point to Ethereum and be like, oh, user adoption's going down, which is in some respects, I don't know if it's true, but it's effectively flatlined. But that's not what Ethereum is effectively becoming the blockchain for other blockchains, which is arguably the most valuable use case of them all. It's becoming kind of like the Fedwire of crypto. You know what I mean?
To me, that's an analogy you've used before, which I think makes total sense.
Yeah, and L2s and L3s, those are different banks built on top or whatever. So I think that is, again, this could be the weight of my Ethereum bags holding me down and biasing me. But extremely bullish ETH, and I think, I still think there's going to be a huge revenge rally coming, at least in terms of like relative performance, which it's already started with the Ethereum ETF, but I still think we got a ways to go. I think everything I'm seeing sort of justifies it. And then finally, one last thing, I think we're starting to see two of the reasons why Ethereum has underperformed is everyone said, okay, Bitcoin's got the ETF, Solana's got the meme coins. Bitcoin obviously still has the ETF, but now Ethereum has its own ETF. So to me, that if anything, there should be relative outperformance in Ethereum relative to Bitcoin. And then meme coins just seem way overdone at this point on Solana. Like, a lot of people are talking about how much of like a value suck and how much wealth is being extracted from these meme coins. We've gone to the point where there's like hundreds of thousands of meme coins launching per day. It's kind of ridiculous. And so I think that game is kind of probably coming to an end, which was effectively the main sort of user adoption of Solana. So I think those two things justify a sort of outperformance revenge rally, whatever you want to call it, for Ethereum over the next kind of 6 to 12 months. And then I think probably the final phase of this bull market we'll start to see some altcoins and like application tokens and things like that starting to do well, because for the most part they've actually done the worst out of all the different key groups.
Yeah, I mean anything that's real world focused or like is doing something interesting seems to be not doing great as an investment. We had the Filecoin. So we had a great guest last week, and in that discussion, she was talking about all this amazing stuff that Filecoin's doing, and we looked it up after, and like it's incredible. And if you look at the coin, it's like sucks.
Yeah.
And there's a lot that goes into. I mean, my partner likes to remind me that a good business doesn't always make a good stock investment, right? When you're looking at a company, and the same thing I suppose can be true for these tokens. But at a certain point, you have to wonder what in a narrative-driven market that is so focused on momentum and story and all this stuff, when the momentum shifts towards those kinds of applications, like Filecoin is, a network that does this decentralized storage and compute and has all this other functionality like data provenance and all this other cool stuff. When does that kind of stuff catch a bit is the question.
Yeah, I still think, as an application sort of founder, I'm obviously incredibly biased on this point as well. But to me, the infrastructure layer has gone way overfunded, and the valuations in that space don't make a lot of sense. I think I was kind of talking to my dad about this. We sort of agreed it's kind of like the early stages of the .com bubble when telecoms and all these like different networking companies were way overfunded and like just had absurdly low cost of capital. Companies like Cisco at one point, I can't even remember. I think it had like $500 billion market cap or whatever. And it never regained it even after 25 years. So like that's kind of still the phase we're in crypto, which it seems weird to say for someone like me who's been in crypto for 5 years, same as you, I guess maybe even longer for you, that we're still extremely early in crypto. Like it's still, there's still not there's almost no mainstream adoption of dApps. Like if you talk to like a random person, almost no one, even people who may have even bought crypto coins have even used dApps before. So things like
Uniswap or whatnot. We're so early. We're so early that when I first got into crypto, I was in my 20s, and I'm almost 40, and we're still so early. So early. Yeah. What about will I be 50 and still saying we're so early? I mean, I don't think I can imagine my life in that many years still doing that, but we'll see.
Yeah. It's I think I still think we're really early. I mean, when we first got into the space, I guess when I got in the first in the space 6 years ago, there was only 10,000 total daily dApp users in the entire world across like 100 apps. I remember the biggest dApp in the world had like 500 daily active users, which is just crazy. Now it seems like we've grown a lot. We're up to like, maybe 100,000, but that's still tiny. That's still incredibly small.
Do you think that's true? Like, what do you think about like monthly active users of like MetaMask, for example? That number is like 30 to 40 million, depending on, I think they say 40 million. Maybe it's more. I mean, maybe people are just like logging in to check their balance or something. But like that's, to me, that's using Web3 applications. I don't know.
Here, I wonder if we can get this chart up, but it's like this,
how
like
many daily active users there are of like
so that
a bag. You know what I mean?
yeah,
Like
there's this.
some apps, it's like Twitter. Yeah, daily active users is a good metric because you're on it every day. But like some financial applications, like daily, it seems like a little too often.
So there's this great graph which shows total crypto users versus internet adoption, and it's a year old, but it essentially pegs us at 1999 levels of adoption for crypto relative to the internet, which is a couple 100 million. So yeah, I mean that's kind of like where we are. We're in the late 90s in terms of internet adoption.
Yeah.
And so yeah, that's effectively where we are. and I there's, you could make an argument that we're even earlier because of, technologies get distribution much faster in a world where there's already internet, right? So like, and obviously there's populations increased, the amount of people on the internet is way higher. So like, to me, there's just like, yeah, I don't know. I guess to answer your question, we're in the late 90s of internet adoption. So we still have a 20-year growth trajectory ahead of us, at least.
Well, I mean, I thought about this a lot, and I tell people that ask me that I think that if you look at the value distribution today within the crypto ecosystem, like what are the most valuable assets? Well, the most valuable assets are Bitcoin and Ether by far. And then it drops off, and then there's some other stuff. And even the next biggest or most exciting thingy or whatever is Solana. And that, along with Ethereum, is still just a platform. It's like infrastructure, right? Like Bitcoin is infrastructure for digital money, and there's all this other stuff that people are doing with it. But Ethereum is really infrastructure to run applications and to do other stuff. And if you think about the 90s, and you mentioned Cisco, it's a really good analogy because in the 90s, the application layer for the web was pretty nascent. Like there were some websites launching, you could do some things on the web, but none of those websites were capturing a ton of value yet. But a lot of investors were looking for ways to get exposure to the web. And so they looked at the world of investment opportunities and they said, companies like Cisco are infrastructure for the web. If the internet expands from 10, 20, 50 million users to hundreds of millions or billions, this company makes the physical infrastructure that's going to be required to reach those people. So this is like owning a piece of the web, right? And that's why Cisco and companies like Nortel Networks, for example, Canada's biggest company for a time. It actually was more than half of the market cap of the whole TSX was one business. Those were basically providing sort of telephony and infrastructure technology. And that's why I think people, even to this day, Ethereum might be hated, but it's still like the hated $500 billion asset class. But over time, where did the value capture really happen with the web? The value capture with the web happened from companies that use the web as a way to reach people, e-commerce, search, social media, all these different things. And the same, I think, is going to be true for this technology, that eventually a lot of these application layer dApps, tokens, what have you, are going to be where the value capture is because they're going to be delivering services that are useful to people. I think the same thing, by the way, could be said about AI. Today, like what's the hottest AI stock in the world? It's a chip maker. It's a company that makes the chips that train the models and do the inference whenever you use ChatGPT or something like that. That's NVIDIA. But like, is that where the value capture is going to come from in the long run? I think that NVIDIA will remain a very valuable company and I think could get bigger. I'm not suggesting it won't. But I'm also saying that I think a lot of the value capture will come from companies using and leveraging AI to do stuff that wasn't previously possible. Now, the only difference in the AI world is that might occur within big tech companies. So, Google might just get a lot bigger because it's using AI. But I think what's at least as likely to happen, if not more likely, is you get a bunch of startups that are doing something different because they're not burdened by legacy culture and, and the burden of being a big business, and they do something new and cool, right? So I think that I think the analogy is a good one. It's an often used analogy, but I'm adding another layer of complexity to it, which is I think if you look at where the money's been made so far, in AI, it's NVIDIA. In crypto, people made a lot of money in smaller tokens, but I'm saying the big value captures happened at Ethereum, Bitcoin. And I think that in the internet, the big value capture was AOL, Cisco, companies like that. But over time, it moved to the application layer. So we are in that transition that just hasn't happened yet. And maybe meme coins and all this other, crap are applications. But I think if you look at the aggregate value of all meme coins today, it's still going to be a tiny fraction of the value of any of the major platforms. And so I think that that's not yet evidence that we've made this transition.
Yeah, very well said. I think, I think that's right. Well, it's still very early to say, obviously, but I hope the value creation will be more broadly distributed than that, than just kind of a couple major winners. But it does seem like we're kind of moving towards, exponential value capture, not just in crypto and AI, but across pretty much every industry in the world. So,
Yeah, the future's so bright, you got to wear shades.
It's funny thing.
All right.
Yeah, one last thing. The one last thing I do think when you are investing in crypto, I think the importance of fundamentals is not that, like, if you buy a crypto asset that has really strong fundamentals, I don't think it necessarily means it's going to go up in a straight line. I just think that when it's out of favor, it won't go to zero in the same way that when you buy like a meme coin or something like that, that has essentially no fundamentals, does. So that's kind of how I think about crypto generally, is that it's liquid venture capital, and the projects that have strong fundamentals, they all have to wait for their moment in the sun, but the ones that have strong fundamentals don't, well, at least not die and continue to fundamentally get better and stronger when they're out of the sun. But in a lot of ways, so it's kind of an interesting market, because like right now, I mean, up until now, like meme coins and Bitcoin and Solana have had their moment in the sun, but obviously, Ethereum hasn't gone to zero. It's been doing pretty well, and I think a lot of these like other altcoins, like Filecoin, for example, they're just chugging along, coming stronger and stronger, and they too will kind of get their moment in the sun at some point. And so we'll sort of see what happens. But
I agree. Well, that's a good discussion, Andrew. We were talking before the call that not a lot of news. The news on the politics, the policy side kind of happened last week, and I think we're in a bit of a holding pattern here until this ETH ETF gets approved. So it is gets launched. Though it is worth pointing out that as we record this, Bitcoin is almost $71,000 and is in spitting distance of its all-time high. Now, the market as a whole is doing fine, and I mean like the broader equity market, but it seems as if Bitcoin is no longer tethered to the NASDAQ in the same way. I'm going to pull the correlations up for next week to see just what it's doing on a portfolio basis, but it's quite evident here that there seems to be sort of a secular bull market now really happening in crypto. And it's ETF flows. I think part of it is just broader mind share. And it's part of the firmament. It's part of the discussion, like in 2020 or 2016 for that matter, nobody was talking about this as an issue that might sway an election, and now it is. And the mere fact that it's now important in that way, I think, is giving people a lot more confidence. So that's it for this week's episode. AY, great to see you. As always, we will be back next week. On the question of Eigenlayer, Celestia, and some of these other things, actually, we're just firming up a couple of guests who might be able to talk on that, senior people in those ecosystems. So stay tuned if you want to learn more. There's always good stuff coming our way. And if you like the show, please don't forget to subscribe to the podcast, to give it a like, a review if you feel so inclined, and to share it with friends. That's how we reach more people. Okay, that's it for this week. Take care. Bye-bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.